On behalf of Monarch Networth Capital, we welcome you all for the Ratnamani Q2 FY21 earnings call. We are glad to host the management of Ratnamani today, and from their side, we have their MD, Mr. Prakash Sanghvi sir, and their CFO, Mr. Vimal Katta sir. I'll hand over the call to Prakash sir for the opening remarks. Thank you, and over to you, sir.
Yeah, good evening to all. Quarter 2 of 2021 result you might have got from the mail by Mr. Katta, but at the same time I can just reveal the numbers. It is second quarter total turnover is 577 crore and net profit is 56.69 crore. Its turnover wise also little bit less from year on year, and profitability was also little bit less from 76.46 to 56.69 crore. Order in hands about 1178 crore on 1st October 20 with 439 crore stainless steel and 739 crore carbon steel pipes. So altogether it is 1178 crore order on hand, and recently what we got this about 400 crore was order for oil and gas cross-country pipeline and city gas distribution. That includes this 1178 crore. Okay, and still some more order visibility is there. We are L1 in some more big size of order, but decisions are yet to taken. So it will come any moment in November, December. We have extended the validity for required tenders. So some more orders will come. And in stainless steel also small all orders are keep coming. And there are number of inquiries what we are bidding on day-to-day basis. So all put together the good inquiry what we are quoting, but the order materialize is taking a longer time due to this corona still, as well as little slow oil and gas. So order decision taking little more longer time. Otherwise there is huge inquiry, direct inquiry, tender, all these things we are quoted a big amount. Out of that we will definitely get our share, that is sure. And expansion side, we already got audited by API for this LSAW line pipe, cross-country pipeline business, the new capacity of say about 150,000 tons. And we are through for the API license. So in a month we are going to get the license and we'll start the production in the third quarter itself over there in LSAW carbon steel division. And in stainless steel, it is still little bit late from this Denali side, you can say our international supplier side, because of again corona, they have not so far visited over here. And unfortunately, in their country, in Europe, the lockdown started for second wave. So it is still difficult they will come. So what we may try to take local help and local Daniel help and execute this expansion of stainless steel port extruded completed by this third quarter. Mostly by December we will take a trial production with today's condition. But we need international that our Italy in supplier help. So we may take on what you call video conference or something. But their presence is more valued over here to start the production. So it is still a little bit more time taking, but internally we are sure we may start some trial route by December. This is long pending expansion of hot extrusion stainless steel, and most probably by fourth quarter we do some trial production, a good quantity. Other thing, everything is there, raw material and everything is there. So this is what the things. Of course, still the corona in the country is there. Of course, passage is coming little down. So we are hopeful things will improve further in third quarter and fourth quarter. But if you can see the Europe, again, in all this country are putting a 2-week, 4-week or 1-month lockdown. So we are worried whether it is not here in the country in this winter. So we are in dilemma what will happen. But we keep continue booking the order, production, everything is streamlined over here. So I don't see a major impact of corona now. This is what and this Barmer refinery still they are taking longer time to release the order. But otherwise, we have a very good hope, and we are L1 over there in big order, about 150 crores in carbon steel LSAW pipe. At the same time, other all small requirement for export, we are booking order, and that's how the stainless steel division has 439 crore order. As regularly it was 350 order. So in order booking increased in stainless steel division. At the same time, this last 2 big order we got, so 739 in carbon steel. So all put together is 1178 crore order is in. This is what we are. And long-term visibility is there, but short-term because of this slowdown in the country, as well as little low price in crude, that take longer time to take decision for the oil and gas expansion or new greenfield refinery or something like that. Somewhere people have a hold the expansion. So the situation is like that. So, thank you.
Shall we start with the question and answer, sir?
Yes.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashutosh Tiwari from Equirus. Please go ahead.
Yeah, Prakash sir. Sir.
Yeah, good evening.
Good evening, sir. So, firstly, like you mentioned about Barmer refinery, where there's some delay happening despite the fact that you are L1. Which are the other projects from where you can receive some orders over the next 3 to 5 months?
Barmer refinery. Yeah, Barmer refinery is the bigger one, and we already become L1 also over there. So we have already extended validity to release the order, but they are taking little longer time. We didn't know because of COVID or because of some other reason. But most probably in this particular month, November only, we make that order what we are checking down the level. And other small order what we are getting in stainless steel, in carbon steel, all small orders. But big ticket size is this and something in a cross-country pipeline for our spiral and ERW.
Okay. And for LSAW segment, any project where probably can get good orders because of no previous
No, also now one good thing we have already got audited by API and they have recommended the license. Now by month we are going to get the license. Of course, we have already started searching the inquiries and being after them and telling about our new plant presentation and all those things. We already started in local as well as international market. So something or other get materialized by month or 2 because it's a new plant. We should get the customer over here and get them, show them the new facility. And things will start in a LSW line pipe.
Okay. Any other projects, big project where probably we are currently bidding or where probably can expect some orders?
We already bidded some this for cross-country pipeline. So they might be materialized in January or February, something like that. Already bidded. Yeah.
Okay. And on SS side, any big projects?
SS side, all these small orders are keep coming from export as well as local. and total order booking in SS is 439 crore. So it keeps coming. Not much big will come from this refinery only, but right now they are doing underground pipeline first, and then second MTO will come for above on the ground. So it will take time. Yeah.
And there was this project of in Mozambique of LNG. Anything happening over there?
Nothing had come so far actually. Yeah.
Okay. So this SS seamless plant will probably get commissioned maybe this quarter end or maybe Q4. So and we are targeting that distributors basically in Europe.
Mostly starting with the distribution. Of course, you are right in the domestic market as well as international market, and that also we are because we are always delay in last 3-4 quarters. So we are not telling much about right now. First we'll produce a good trial production in this January, February, and then we'll start because people need commitment also, and the price also based on the nickel. So we are still not. Of course, we will internally we are ready. So we can sell from January, February onward.
So next year, what kind of volume we can expect from that plant? SS seamless.
Say initially you start, you can say 30 to 40% from that new this hot extrusion press for the domestic as well as export, but capacity utilized between 30 to 40%. So it's a new thing. So many grade, size, diameter we develop first internally, and one by one we put into the market.
30-40% would be equivalent almost 6,000 tons in the.
So that's our target is there. Once it streamline everything, we'll definitely do that 5,000 to 6,000 tons. No doubt about it.
And lastly, on the domestic front, because all these clauses by government in terms of neighboring country suppliers and all, are you seeing some traction from that side also that probably there is localization happening, or it will take more time?
Almost good.
See, Ashutosh, once the projects start now, then it will be there to the local manufacturers because
even up to 200 crore,
sourcing has to be from the Indian buyer. But simultaneously, some adverse impact in overseas market will also be there because all the majority of the countries are promoting same policy, buy from the local. So once the capex cycle starts in the country and PSU starts the project, then that will be a big positive for the Indian manufacturer.
But Middle East, there is no manufacturers for this stainless steel seamless hot extruded pipe or tube, no manufacturers. So Middle East market is always there. African market is always there. Only things will suppose Europe. Europe is still open for us. It is only they have put anti-dumping on Chinese. Rather, Europe, we are regularly, we got good order from Europe only, and we have a good distributor, and he keeps our stock also over there.
Okay. And on the capex side, we did almost 92 crores in the first half. So full year, how much will you do? And next year, any guidance if you can provide?
Maybe around. See, if the entire capex happens, so it should be nearer to the 200 crore figure. Roughly for the entire year.
Okay. And next year?
Next year, not planned. See, too early to plan because first we like to consolidate whatever we have done.
Yeah, we have to put in the market from both LSW as well as extrusion. Our more important priority will be this only. Whatever you put this in last 2 years, 600 crores. Now you can start selling in the market, the material.
So capex will be very low next year, basically. Or next 2 years also.
Of course, if some opportunity will come, like NCLT, like direct deal, something in pipe only, and very cheap buying, then of course, because we may think for other location, not for the present location, other location only. Yeah.
And on the ERW side also, we are expanding small.
Yeah, that will be also available capacity from January onward. It is just finishing line we are putting. Yeah. So almost construction is by this month and we will complete. and the machine also keep coming. So by December, they will erect everything. Also, we hopefully start trial in January for second week.
Our capacity in EW will go to 1.2 lakh. Was that?
Yeah, it will go from 70 to 1.2 lakh ton.
Okay. That's all from
And their visibility is there. It is purely for city gas distribution, and even today also we had booked till May, June for city gas. Our present capacity already booked up to May, June.
Okay. So that side, basically, order booking will be remaining quite strong.
Yes.
Okay. That's all from my side. Thanks.
Okay. Thank you.
Thank you. The next question is from the line of Kaushal Shah from Dhanki Securities. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. Sir, you mentioned about the likely utilization for the SS plant in the next year. How do you see the on the carbon side, carbon steel side? Because there again we are putting up a large facility. So what is the utilization likely, and how do you see the utilization from the new plant in the next year?
See, for first immediate next year might be 25 to 30% we are going to utilize LSW, and it depends more on the kilometers of the line pipe. If it is some international, we are building some international project also for line pipe, some over here. But that is a product mix of spiral or LSW. So because today spiral is also the capacity is available. So first we will. It depends on the thickness and diameter what capacity we can utilize. But our internal target is about 25 to 30%. This new capacity we should utilize from 120,000 tons.
Sure. Sir, on the EBITDA margin, there has been some disappointment in this quarter. So if you can just kind of give your thoughts or guidance.
See, basically, it is because of the change in product mix. So, mainly process pipes in carbon and steel, that is LSW.
Okay.
Dispatches have been on the lower side, and dispatches in helicals have been on the higher side. So, mainly it is because of that. But as we have been telling, is that broader range of 16 to 18% for the entire year is what one should be looking at. Quarter on quarter, we may see EBITDA moving up significantly, maybe 18-20% range also if dispatches of only process pipes are there or project pipes are there in a particular quarter. So those sort of situations may be there. It may come down to even less than 13-14% if major part of dispatches is from the line pipes. So lot depends on the product mix and the deliveries scheduled as per the requirement of the customers.
Okay. And sir, one final thing on the working capital side, any particular thoughts where we see the overall days? There has been some rise in inventory.
The inventories have rather come down. Because the inventories move in tandem with the outstanding order book position. So, but on average, in our case, roughly 4 months of inventories will always be there because we cover our raw material on back-to-back basis, and we need to carry a lot of inventories. Then inventories are also linked to the nature of order. So if carbon steel pipes are with inside and outside both the coating, then inventories of bare pipes, then inside coated pipes, and then pipes waiting for is fully coated pipes. Those sort of inventories will be there. Similarly, in case of exports, particularly of carbon steel pipes, one need to wait for the shipload to be available. So then your inventory levels move up. So lot of things are there. But on average, roughly 4 months of inventories will be there.
Okay. That helps, sir. I'll join back in the queue. Thank you.
Thank you.
Thank you. Reminder to the participants, to ask a question, you may press star and 1. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Thank you, sir. Hello.
Yeah, good afternoon, Saket ji. Yeah.
Namaskar, sir. Namaskar.
Yeah,
namaskar. Sir, firstly, for the capex from the PSU side, sir, as you have elaborated about Barmer Refinery's orders being delayed, and we also read today that one-third of the capex have only happened and a lot is left to be spent, sir. So, sir, where is the what is your feelers on the ground regarding the capex from the PSU front, because there are also running short of cash. So how are things going to shape up, sir, going forward? How is the environment shaping up?
This current financial year, things will be little slow because of the one thing is COVID impact. Ongoing projects, those are also delayed. So nobody is in a hurry to place the orders for the next phase of the project, next leg of the project. So those sort of things are there. Hopefully next financial year should be more promising because a lot of things are now settling down, and we have seen now green shoots are visible in the economy also. So from fourth quarter onwards, we should be seeing some good improvement in the demand side also and project implementation side also. So this is our expectation. Let us wait for some time how the things move in third quarter, particularly on the demand side. October collections of GST have been good. So if this momentum is maintained, then PSUs will also start expediting their capex plans. So some time will be taken. Yeah.
Right. And sir, if we split the order book as you have given between the carbon steel and the stainless part, if we put it industry-wise, the majority will be skewed towards the refinery segment only, or whether fertilizer.
Majority will be in case of carbon steel. It is almost you can say 90% will be for cross-country pipelines and city gas distribution. Okay, almost 80 to 85% one can say, and remaining will be refineries and petchem. Then in case of stainless steel, it is again more than 50% will be refineries, petchem. Remaining 50% will have power, fertilizer and other things. Yeah.
Right, sir. And so we are also seeing this raw material prices moving up, although you have already explained that we do back-to-back closure of raw materials. What factors are actually playing up for this firming up of raw material prices, and what indications are we getting of this firmness in the raw material?
The raw material trend in steel, it is going up month by month, say 1,000 to 2,000 rupees per ton because of Atmanirbhar Bharat and lot many restrictions on import. So it is definitely local are increasing the price. This JSW, this Lakshmi Mittal, old SR, and Tata Steel, of course. Because it depends on internationally, this iron ore price also getting firmer. So they increase. The main reason they say the iron ore increase took place. In stainless steel also it depends on nickel, moly. These are the two main elements. And these are the commodity stock trade in every day in LME. So it little bit fluctuate over there. Say it's moved from 13,500 to 15,000 the LME nickel. So based on that, say about 10 to 12,000 rupees in last 3 months it took increased place. So you can say 4-5% anyone can absorb. And our policy is almost even we keep some stocks standard size, and otherwise we book on back-to-back basis. So not much affected. Even our all carbon steel orders, what we got recently, that we have booked the moment we become L1, and we started negotiated with the parties, the vendor, supplier, and we booked at our budgeted price. So not much impact on it. And anything now we are quoting with the current market price.
Right. Sir, out of this capital work in progress of 452 crore, how much would be capitalized by March 21?
Almost everything, because see, LSAW we have already completed. Only remaining 50 crore for Taksim, bigger diameter. That also we will complete by this December, January. Then this side extrusion also will be completed by this December, January. So by March 21, everything, all the capex, nothing will be more work in progress. Everything in the books installed and start production. Yeah. Something in third quarter and maximum in fourth quarter.
And for the LSAW new capacity, sir, what is the total cost of project, sir, which will get commissioned?
Say, put together this LSAW and Saksim, the 150,000 ton capacity, it's about 240 crore, you can say, including land and everything.
Right, sir. And thank you, sir. Thank you for the opportunity and season greetings to everybody.
Thank you. Same to you. Yeah.
Thank you. The next question is from the line of Ashutosh Tiwari from Equirus. Please go ahead.
So on this water side, is there anything happening or there also delays are there?
Water also it is delayed, but something for next year, what we were having in last week, the meeting internally, how we have to utilize the capacity, something in water also, because now the capacity is more available with this LSAW. So how we can utilize something for spiral in a water. And some tenders are there, but that is for the next year actually. It will be materialized by February, March only.
You mean to say the orders will come by March or you will wait by March?
No, sir, tender will be something December, January, then they will take, because it goes to EPC and then EPC will take decision. So it will be February, March.
Okay.
Yeah.
So next year something can come from water. Right?
Yeah, water will be there. Yes.
And water will mainly be helical saw only.
Helical saw only.
And circumferential sequence.
Sometimes, but in helical saw, for water we have a size range up to 140 inch dia. So everything goes to helical saw.
And we are also thinking of shifting the plant to eastern side. Is anything happening over there or?
Yeah, it is still in the our decision, but because of this COVID, it has been delayed. Because we have some good machinery available with us. What plant we put in Nagaur, the entire plant is available, and here 2 spiral mill is running very well with offline welding. We have good capacities here. So anything we would like to put in somewhere in south or east. So that we will, once it will be this COVID is over, and we will start again looking the site and something in that area what new is coming. So by linked with the project complete and something you can get to start the production also, something like that.
Okay. And there was this pipeline from I think Kandla to Numaligarh or in that eastern side. Any orders come from that side, the east-west pipeline?
Yeah, there is a eastern grid. The tenders already started on what you call reverse auction. Eastern grid. The eastern grid to company side pipeline. 21. But from where to where? 7 state. When it will be over the order release? Not Numaligarh refinery, but other your long pipeline, cross-country pipeline. Numaligarh. And you said the eastern corridor entire pipeline. So still you need have to come something? Second phase. So the first phase is already awarded, and we got into that only. Oh, okay. So that is what the name of the pipeline? IGGL. Okay. See, the IGGL first phase, they've already over in that. Only we have got in last month that 400 crore work order. Okay. Now, second phase will come after 6 months. This is Indra Dhanush Gas Grid Limited or something like that. Yeah. Okay. There is a tender from Numaligarh refinery that we are bidding now. Yeah.
Okay, I got it. And on this chemical and fertilizer side, I mean, is in that industry is probably because that's doing well. So on that side, some orders are coming for SS side,
Yeah, for SS side, small orders coming, 3 crore, 5 crore, 10 crore, something like that for fertilizer. Even for power also keep coming, BHEL. Then you can say pharma industries, this API industries, like Devi, something new company in Vizag, they are putting big investment. This Devi, something name. And we are quite regular supplying them the stainless steel, seamless and welded pipes quite regularly. Because now there is one big thing start in country, this API drugs. We were depend on China because of this border issue and these and that. Government decided, central government had to put 3 API drugs park, industrial park in the country. One is in Gujarat, Jhagadia, other one is in Telangana, and other one is in north or east somewhere. So central government is pumping 1,000 crore for acquiring the land and this and that. And then local GIDC or MIDC, they take care of that industrial park with the discharge facility. The most important over here in this chemical industry, you have to have a good discharge for pollution point of view, a common discharge. So nobody have a problem and things will move. So we feel in next 2 to 3 years, number of companies will come from the Indian entrepreneurs or some may come from outside also in this particular range, segment. Hello.
So like we say that, say in case of a refinery, almost 7 to 8% of capex is pipes. Any color on how let's say for a chemical plant, what could be the pipe orders and all?
Pardon, Ashutosh?
So like you say that in case of a refinery, around 7 to 8% of the capex towards pipes and all.
Yeah.
Do we have something like that for a chemical or fertilizer plant as well? Or it's not that big for these plants?
No. In case of chemical or this chemical plant, it will not be that significant.
Obviously.
Around 4%, 3 to 4%.
Yeah, but this API drugs, there the entire stainless steel only they use. So their quantum might be a more bigger for this API drugs. Like Devi, we are regularly every month Devi's lab. They are putting something in Visakhapatnam. So there the quantum will be definitely more. And other thing is LNG. LNG is also entire stainless steel because of this gases is with 190 degree temperature minus. Yeah.
Okay.
Cryogenic application. Cryogenic. Yeah.
Okay. So one other thing related is that in case of these nuclear power plants, I think we had got earlier big orders. So is there any progress happening over there also in case of nuclear power plant, or is that basically not moving there?
No, so far we got some orders through, you can say, fabricator for nuclear industries only. But in near future, definitely something will more come for piping, primary piping, insulation tube. That they take little later. This all equipment. So heat exchanger tube orders we got it, and the piping and insulation tube will come later. Because the plant is already site is already running in Haryana for one side. Like that, the 8 projects will come in the next 7 to 8 years.
Okay. So there maybe we can get some orders in
Yeah, definitely. Yeah.
Okay. So going ahead, probably API is one new opportunity which can become a decent.
Yes, that's what we look and definitely there the entire quantum will be stainless steel pipe and other things, their equipment.
Which equipment, sorry?
No, for this API, there is maximum quantum from stainless steel division only.
Okay, so that probably could become a decent size for us in future.
Yeah. So this is a new segment, you can say. Earlier pharma was there, but not much. But in API, there is a huge line, pipelines is required of stainless steel nature, right from half inch to 10, 12 inch.
Okay. And sir, one more kind of futuristic, but this hydrogen energy generation and all that being used as fuel, I think there are some plants coming from Middle East as well. So on from that hydrogen energy.
So hydrogen, hydrocarbon, what we call it.
It's generated from hydrocarbon, but hydrogen energy is generated in some cases. It's also from sea water that is generate hydrogen energy.
No, that still too costly, that energy actually. Still too long way to go. Still before it, this whole battery operated some car may come in the country. Rather in our country, it's very difficult for charging again. It might be coming in a small country like European country or Middle East or somewhere like that. But why Middle East? There is a used petrol diesel available. I don't think anything comes like that. And this water, hydrogen is very, very long way. And the cost is too high for that.
Okay. But they're putting some plant actually. They already have some plants over there.
We have not heard much about it.
Okay. Yeah. I got it. Okay, so that's all from my side.
Thank you.
Thank you. The next question is from the line of Sahil Sangvi from Monarch Network Capital. Please go ahead.
Yes. So my first question is, what is our current outstanding ELSO order book?
See, I have given the figure. It is a total carbon steel division. We have a 739 crore order on hand. And in stainless steel, we have a 439 crores order in hand. And so total is 1178 crore order with the company for stainless steel as well as carbon steel all put together.
Right, sir. I was specifically asking on the project piping order, which are the higher margin ELSO pipe. So do we have?
It might be 100 plus crore something, because here we are expecting some more orders to come in this particular month only, say about 150 to 200 crore worth order.
Which will be processed in FY22, right, sir?
Yes. Something in fourth quarter and then 21-22.
And this 100 crore will definitely be processed in FY21?
Yeah, this is in this particular third and fourth quarter.
Okay. So we can see some expansion of margins in the second half, sir, because of these orders?
Not exactly. Margin profile overall will remain. See, Sahil, margin profile overall will remain this 16 to 18% range.
Okay,
it is
sir.
very difficult for us to say in a particular period what will be the margin profile, because these dispatches are totally dependent on the requirement of the customer. So,
right.
that profile, product mix will undergo change, not based on our expectations, but based on the actual requirement of the customer.
Right.
But for the entire year, based on the product mix which we are targeting, that maintaining 16 to 18% EBITDA seems to be possible. Yeah.
Right, sir. Right. My second question is on the current investment side, sir. We've added about 400 crores of current investment as compared to March levels. So what kind of other income can we derive from here? What kind of interest income that can?
Really speaking, because of the reduction in outstanding order book position, a lot of working capital has been freed, which has resulted into investments moving up. But returns on, in case of investments, have been coming down. So now average will be nearer to maybe around 5% sort of thing. So that is something which we are never very crazy about. Our main focus will be if order booking can happen, so then returns are very good in manufacturing. So our target will be, if wherever opportunities are there, we should be there, because a lot of help will be there from the newer capacities also once these become commercially available. So,
right.
But on average, you can say this current momentum will continue. In between, figures may move up or move down in case of investments. But right now, one can say whatever has been average of first 6 months, that should be carried forward in coming 6 months also. Because if order booking starts, so immediately outgo will not happen. It will happen over a period of time. So, same level can be considered. Yeah.
Right. And my third question is on the API pharma projects that that Prakash had mentioned. So what kind of what quantum of orders, I mean, in terms of percentage, like, we have 6 to 8% of the capex for say line pipes. So that way, can you give a quantum over here?
See, here particularly entire stainless steel different grade will go. And definitely it might be of their capex, might be it is 5 to 8% will be there. The way we are delivering right now, giving to some 2-3 companies regularly. So the project is going on, and every month we are getting order and this stage took place. So like that, number of unit will come, but it will take time. Now government has announced, and then the people will take the plot, and first the discharge facility built by the GIDC or MIDC or state-owned company, something for common discharge. Then things will move faster. So this is an announcement. Based on that, people are getting land over there in Jagadia. In Gujarat, they have taken place for Jagadia near this Surat.
Right, sir.
Like that in Telangana, somewhere in east or north, somewhere. See, 3 big industrial parks they want to put for API drugs, what we were dependent on Chinese. Because of this border issue and more about the Atmanirbhar, we need to put this big investment in this particular area. Because in formulation, we have a big capacity in the country for this formulation, this all medicals.
Right.
So they need backup for the raw material. And so far we were not importing from the China. And because of this whole issue, this is the new development, and government, central government committed 1,000 crores. And rest state government put the money, the local GIDC or MIDC or their local body. And they can develop the industrial park with discharge facility. So the unit will come faster. Otherwise, everybody has their own discharge facility, and there is a very tight norms of the Pollution Control Board. This will be more faster. The investment will come in the country more faster way.
So can we expect some orders from this in later half of FY22, or would all of that come in 23?
21, 22 only, because still they have announced now that they will take the plot, this, that. So it takes time, 6 to 12 months. But
Okay.
It's good. Things are coming in the country. So definitely all local manufacturers will get a good chance.
Right, sir. Right. And my last question is, sir, on the imports that are coming in SS Steel and that we want to substitute going forward. So what grade and what NPS are these imports, and do we manufacture all of them?
Yeah. We manufacture all of them, and once this capacity will start stainless steel, we also will go to the government as an association of seamless pipe manufacturers and ask them to put anti-dumping duty on Chinese product. Okay. They have already taken one step. They put a quality control order. So any material comes from China, it has to be BIS approved material. Okay. So that one restriction is already started. But now we need some more restriction, because they are purely dumping over here in the country. Because their process is something different, our process is different, worldwide the process is different, and Chinese process is different. So quality is not up to the mark, and lot many people are putting in their tender no Chinese origin material to be used for our finished tube, something like that. So and practically they are dumping. So that data is available with us. Once we have the capacity in the country, then only we can go. Otherwise, they depend, and we say we don't have a delivery right now. So we are waiting for just 3-4 months, and then we will definitely apply for anti-dumping. And government is also in favor. Yes, first the local industries has to survive. Like that, they have already put anti-dumping, this CVD duty on this Indonesian producer. They are the world largest stainless steel flat rolled coil producer, and they put about 22% duty on that. So you can see the General Stainless, they make our raw material for welded pipe. Now otherwise they have a huge competition with them, and you cannot compete them because they have a right from iron ore, nickel ore, coal, everything, their own port, their own ship, and they put the investment in Mundra for cold finishing only.
Okay.
So right now they are very much in difficult. For their own raw material, they have to pay 22% duty.
Okay.
So we hopeful we will definitely go for seamless pipes and tube anti-dumping duty once we start the new capacity commercially fully.
Right, sir. So, sir, costing-wise, the pipes coming from China are cheaper, right, as to what we manufacture over here?
But the comparison, quality-wise also not that good, because the process is what they are using. The process is what the people are using in this ISMT, then Maharashtra Seamless, then Jindal Saw at Nasik. It is a hot piercing, and what we use is a worldwide. People are using hot extrusion. There is a big difference.
Right, sir. So that would be our strategy, sir. I mean, if at all the anti-dumping duty does not come in, what would be our strategy to replace the imports from China? Majorly the quality? Or
see, today also we are selling a good quantity and exporting a good quantity against them, because there is a two type of buyer then. One go for cheaper material and one go for a genuine material and have a long life. So it is a two type. Wherever a ordinary application there, they can use Chinese material also. But we educate them because all these 365 days running plant, whether it's a refinery, petrochemical, fertilizer, power plant, nuclear power plant, chemical plant, all this running 365 days. So for their 2-3%, 4% investment, they will not take that risk. They will go for a reliable product only. And so many tenders we got in writing, giving no Chinese origin material you have to use for finished tube.
Right, sir.
Yes. So quality always win, what we feel.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Mehernosh Pantaki from Danke Securities. Please go ahead.
Yeah, good evening, sir. I had a couple of questions.
Yeah.
One is on the order book side. As you stated that the current order book is 1,180 crores. So just wanted to know how much proportion of this order book will be executed by this end of financial year?
See, almost you can say almost 20% will be executed in current financial year itself.
Sir, how much is 70%?
More than 70%.
Okay. And sir, can you approximately give the proportion of orders of helical saw pipes within the CS order book? How much it is?
See, right now it is not available because this will include helical saw, ERW and L saw, all three put together. Out of the 739, you can say almost 600 plus crores will be for helical saw and ERW alone.
Yeah.
Okay. So, sir, as we have seen that over the last 2 quarters, our margins have contracted, and that has been largely because of higher execution of helical saw pipes. And within this order book also, there is some 600 crores of helical saw pipes orders. So, still, you feel that in the second half we'll be able to do a margin on a higher side, like around 18-19%?
No, 18-19 may not be possible, but blended for the entire year, this range 16 to 18% holds good. Yeah.
Yes, sir, because in the first half, your margins, your EBITDA margins have been 13.5% only.
No, we include other income also, because that is also coming from the operations only.
Okay.
So yeah.
Okay, and sir, just wanted one more clarification on the L1 orders which you specified around. So you were stating that around 150 to 200 crores of orders you are L1, and you expect the order inflow in around 2 to 3 months. So this is only for this Balmer refinery you were talking about. This is the total orders.
No, Balmer refinery.
Okay, this is only from the Balmer refinery which you are expecting.
Correct.
Okay, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Hello. Good afternoon, sir, and thanks for the opportunity. So when you talked about this API, park, which is giving us a new opportunity. So what kind of market size, you are sizing for that, or opportunity for us?
See, right now, only 3-4 people are there in the country. This, this Hyderabad-based company, Dr. Reddy, and then एक अपना regular customer है ना, Arvindo, and now new companies are coming like Devi Lab, something again in South. So now, because of government is supporting and it is a need of the day, because we were totally dependent on China, and because of this whole border issue, and we want to be Atmanirbhar, so government is helping to put a all new API unit in 3 big industrial parks they are going to build in Gujarat, Telangana, and one more state, and with the discharge facility, a common discharge for the entire industrial park. So with that, there is a number of industries will come up for bulk drugs. That's what we feel. And for that entire tubes and pipes, whatever they use, say 4 to 5%, it is all stainless steel, different grade, depend on their corrosion.
Okay. So 4 to 5% of the total capex requirement will be for stainless steel, right?
Yes.
Okay. And so secondly, when you talked about project-related pipes, which contributes higher margin, so in which segment particularly you're talking about?
It is a project piping LSAW.
Okay, LSAW.
Yeah.
Okay, and sir, when by March FY21, our capex is the TWIP, which is almost around 400 crore. So what kind of fixed asset turnover you are expecting on that, and by when you are expecting a full capacity utilization?
See, this 400 crore is with stainless steel as well as carbon steel, not only for carbon steel. Okay, because 200 we did in past, and so total 600 crore investment in last 2 years it will happen by this March 21. Okay, in 600 crore we expanded the capacity, VRW something, LSAW new greenfield plant, then hot extrusion of stainless steel seamless plant. And with this all, in next 3 to 4 years, we will get about 1,500 to 2,000 crore turnover in next, because it will ramp year on year. So starting it will be utilized, say, 25 to 35% capacity for both, then 40 to 60, then 60 to 80. So like that, we may get the turnover like 1,500 to 2,000 crore from this new capex.
Okay, so are you requiring any capex post that, at least for next 3 to 4 years?
No, not immediate. Right now, we will definitely put all the emphasis on this, how we have to market this, both the product in a fast way and capacity utilizes in faster way. At the same time, we have some balanced machineries of carbon steel, helical, so we may think something in in south or eastern part. So that because of Corona, it got delayed. So that we will see some opportunity will come for from the NCLT or from some options. Then we'll go for our related product either downward or upward only.
Okay. Thank you so much.
Or backward integration only. That's all.
Okay. Got it, sir. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Adish Mehta from Motilal Oswal Asset Management. Please go ahead.
Sir, my questions have been answered. Wish you all the best.
Yeah, thank you. Good evening.
Thank you. The next question is from the line of Ashish Das from Sharekhan. Please go ahead.
Hi, sir. Good evening. Thanks
Yeah,
for the
good evening.
opportunity.
Yeah, good evening. Thank you.
Sir, earlier we, last con call, we mentioned that our revenue target would be around 2,000 to 2,300 crore. So for FY21, now it holds, or do you think that H2 would be better than H1?
No, it holds too good. We try to increase by 50 to 100 crore, but that all depends on the fourth quarter. But our internal, it is 2,200 plus minus 100 crore. It is there, and we will achieve.
Okay. Sir, another question is like raw material procurement. So do we do any procurement from outside India? And as the second wave of lockdown starts, so would it impact our procurement?
No, not much. Mostly our raw material is available in carbon steel over here. Some special grade only we have to need to import. But right now, what order we got, we have all the booking is there. There's no problem, no shortage about raw material. Stainless steel plenty available in the country, both for seamless as well as welded. Some special grade only we need to import, and that also keep coming. The lockdown is for the all mega cities. I think the factory level, still in Europe, everybody is working.
Okay. And last thing, like you mentioned that we also need international approval for our new capacity expansion. But you also mentioned that some video conferencing you will do, and then we'll get the required approval and start commercial production.
See, that is what our hot extrusion stainless steel seamless plant, because of COVID, they have moved. They were here for commissioning the equipment. All equipment arrived from them, and they were here for installation and commissioning. And on 24th March, they have leaved. And they're supposed to come. We have arranged visa and this. But then again, lockdown happened over there in Italy, in Germany. So they couldn't come, and we may try with the video conferences, with their help, and start over here. Our internal confidence is there. We may start the trial production by December over here itself.
Okay, got your point. Thank you so much.
Yeah, sure.
Thank you. The next question is from the line of Shailesh Raja from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. So in FY19, across the product vertical in both CS and SS division, we operated 80% utilization level. So the contribution per ton was around 19,000 and fixed cost was around 8,000 in FY19. So with the expanded capacity, again at 80% plus utilization level, what kind of contribution per ton and fixed cost per ton you are looking, sir, and what kind of delta you are looking in contribution per ton?
See, it is very difficult to say on per ton basis because it all depends diameter, thickness, grade, all such, right? So it is all a product mix, and average you can get the EBITDA at the year level. It might be between the range of 16 to 18%. You can see last 10-year history. It is always there because some product different carbon steel, some and quarter to quarter also. If you compare, it won't possible. So year to year, if you can complete all product mix, the company have a range of 16 to 18%. Sometimes it might be plus 1%. Sometimes it will be minus 1%. That depends on again product mix.
Okay. Thanks.
Thank you.
Thank you. The next question is from the line of Shanti Patel from SP Investment. Please go ahead.
Sir, I just wanted to ask you, after our this expansion is over, what will be the market share of our products falling under various segments, and where we stand in the industry?
No, I should not get you the correct question.
You see, after the expansion is over.
Okay. Expanded capacity. See, right now in particular segment, we have about 40 to 45% market share in heat exchanger tube, in insulation tube. But now the new capacity is coming more of the piping. So definitely we have to, because there's the largest capacity in the country, you can say, what we are putting, say about 20,000 tons single stage. Okay. So this definitely we will try domestic market as good as 35 to 40% to start with. And the size range, we produce some sizes nobody else is producing in the country. So definitely our share, but it is a slow process. It will take maximum 2 to 3 years to ramp up the 70, 60, 70, 80% capacity utilization. Not first year, second year, third to fourth year.
No, it is a year wise, It will go up and up every year.
Yes.
Correct?
So definitely we will definitely in seamless type, the same thing will like 40 to 45% share will be there of ours. Because we are the largest in the country for seamless as well as welded capacity even today also.
Who is our main competitor?
Over here in carbon steel, number of people, this Welspun, Man, Jindal So, these are the competitors. In stainless steel, this Suraj Stainless, then Tubasex Prakash, and Bhandari. Then now I think something they've started, Jindal So also some division, they also started something, a newcomer you can say.
So, but then competition will not go, go up if other people...
Competition will go definitely, but here in our stainless steel segment, the quality is always winner. See, because the cost of the pipe is right from 300 to 3,000 rupees per kilo, depend on grade, size and thickness. So, for that matter, because it is a highly corrosion area or highly temperature area they use, so they will not compromise anywhere for the quality for newcomer, even though you will give cheaper.
Right. Because of the established name.
Yeah, that's how that's 35 years. And you can see last 10 years, 12 years, we impact our share. And rather we are increasing our share year on year.
Correct.
And
thank you very much. Yeah, sorry.
Putting this new capacity will definitely increase our share in the market.
That's right. That's correct.
Yeah.
Sure. Thank you very much. Thank you.
Thank you. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Thank you again for the opportunity, sir. In the water segment, we are mainly catering to the connecting of big, large water bodies.
Large water bodies. Right.
Okay. So, sir,
large diameter only, because small diameter goes to this DI pipe. You might have a DI pipe.
Right, sir.
Yeah.
And sir, currently, sir, has things started moving on in this interlinking of river projects, sir?
No. Nothing else. See, I think in the country problem is that because of this COVID, everything had been postponed, delayed, this, that. Because you might have seen last from March onward, everything COVID. Now something we are getting relief and cases are coming down and down. And of course, everything is moving well. In Ahmedabad, of course, the COVID is there. Every day there is 150 to 70 cases what they declare. And that is 2 to 3 days only from the COVID. But real history, of course, now the fear hai, wo nikal gaya hai. And everybody is working. And now we are in festival season. So everybody is in marketing.
Correct, sir. But sir, if we take this water segment part, sir, who are our key projects where we are into?
See, all this state government, directly we are not giving to state government, we are giving to all this EPC, like Larsen & Toubro, Mega, Nagarjuna, then here in Gujarat, Jai Somnath, Kalpataru, all EPC buy from us.
Correct, sir. And sir, one point we have also seen that one of the competitor, Welspun, has also entered into this DIP segment. So, sir,
it is a DI, but we are not at all in DI segment.
Yes, sir.
Yeah.
So, are we looking into?
No. Now, in one particular place, there are 2 people are there in Mundra, in Kutch, Jindal So as well as this Electro Steel. And then he is also putting a big capacity. So there's no way now to go in a very competitive market. Again, water is a more competitive market.
Right. And last point is about, sir, this on the stainless steel part, sir, some provisional duty has been set up from imports from Indonesia. And
correct.
I think, sir, on the pipes part also, sir, some CVD countervailing duty and something was put up, I think, a few months ago. So, sir, how is it going to affect? Yes,
no, that will be help us. Rather, you can say in pipe what they put, it will be help us. Now, in our raw material, that is coil, HR coil and CR coil, there they put on Indonesia, it little bit, you can say, a single source available in the country. But other countries are available. All other countries are available. Okay. Other than Indonesia, You can import from Europe, you can import from Japan, Korea, all available.
But we are doing it from domestic sources only. That
60-70% we are utilizing domestic material, but some special grade, something on delivery, on quantity, we are getting better price. So we are importing also.
And for the tube part, sir, what was the duty structure change, sir? How has that impacted the market? I think so. That is a 6 months.
No, that they have put on Vietnam, 2-3 country only. Some duty different on party to party based on their benefit, local benefit available. So it's vary from 10 to 24%. But 1 or 2 parties still they have not put any duty. So that harassing us over here in welded segment. So that material is coming under duty free under the trade agreement of the country to country. So for that also we have took up again matter after that first phase. Now is the second phase. Keep it that 2 party also our association. We build an association and then association taking care with the government. Keep it that 2 parties also really dumping. It is just coil plus $100-$150. It won't possible at all. So practically they are dumping. So the government will definitely see because here in welded pipe manufacturers are numbers of people are there. Even for an ornamental one segment is a big segment, ornamental tube. So that all coming from this Vietnam. Just 2 parties, two manufacturers.
Okay. Thank you, sir, and
thank you.
Please take due care, sir. Thank you, sir.
Thank you.
Okay.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good evening, sir.
Good evening.
Sir, I just want to understand one thing. You commented that in some of the orders where you were L1, you have given an extra time in terms of the materialization. So, in terms of back-to-back bookings, since every month steel prices are on a rise, so even if we get, because our contract price would have been fixed if they accepted, right? So how does it change our margin profile then? Because steel might not be agree after a couple of months to give you a 2,000 or 3,000 rupees cheaper.
We knew in tender business with the PSU and all those, it will definitely take 3 to 4 months. And we take horizon of 3 to 4 months of this raw material price, and we keep that margin also. So, and when we extend the validity of the tender, we see internal again whether it's okay with us, then only we extend. Otherwise, we are free to say no. And they have to do re-tender.
Okay, so we can assume that the margins are more or less
so major impact
is protected in that.
Our some percentage we have took for that price variation. Within that we accept and we extend the validity. If it is beyond that, because if it is longer period they took and then definitely it become beyond that, then we say no, we cannot extend the validity, and then it become a re-tender.
Understood, sir. Sir, my second question pertains to our basically our increase in the investment. At the same time, we have a long-term loans also of 120 plus crore. So since so why haven't we choose to pay prepay long-term loans? Because since it was not a working capital loan, so it should have been paid, right? Considering the 5% kind of the yield on the investment.
See, because these loans were tied up in respect of the ongoing capex, and these capex were expected to be operational last year itself. Okay. So this increase in investments means liquidity with the company is because of the cash generated over this extended period which has been available to the company. Otherwise, the working capital of requirements of the new capex would have sunk all the liquidity. So, and these loans have come with certain lock-in period. So we are exploring what can be done, and we have not drawn also fully one of the loan which is there. So we'll take a call based on our overall assessment what best can be done.
Okay, sir. And so just one last question pertains to our SS new mill. So considering that the getting delayed from Danieli in terms of, support and all that, in case if we able to restart a portion of the mill from the local support, so can we sell, can there is a market of, commodity grade or some other grade which would not require stringent certification and can be utilized some portion of the mill? Is there any market available, or the entire market is basically order based?
No. See, here in case of new hot extrusion, part capacity initially itself was planned to be sold in as is condition to actual users without any cold finishing being done by us and to the other cold finishers also, because this capacity will be used. Okay, one thing is that. Second thing is, anyway mandatory certifications will be required, whatever may be the situation. Okay, and when we say we should be in a position to start the commercial run based on our own resources, even if Denali is not in a position to come down to India because of this COVID situation, then also certifications will be required, and we are confident that we will be in a position to get all the certifications. That has nothing to do with the machinery supplier. Machinery suppliers assistance is required for the now for the programming and other things only, which our team is trying to take care using the local resources.
Understood, sir. Understood. Thank you for answering my question, and all the best, sir.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Sahil Sanghvi for closing comments.
Yeah. Thank you, Vimal sir, and thank you, Prakash sir, for patiently answering all the questions. On behalf of Monarch Network, we also thank all the participants for joining the call. Prakash sir, do you want to give any closing comments, or should we end the call?
Should we end? I think I have clarified everything to the all analysts. But still, the visibility is there, and things will improve after this COVID, and things will go better. And very happy Diwali and New Year to everyone. Yeah.
Thank you.